This beginner's trading strategy is deceivingly simple and profoundly profitable. Okay, this might be the easiest trading strategy I've ever seen. It will outdo many of the seasoned professional traders, and it's so simple, even newbies can understand it. It shows exactly what big institutions are doing, exactly what you can do to ride on their coattails. There will be no second guessing after this. You'll know exactly how the institutions think, how they trade, what to look out for. I just highly recommend that you backtest it before using it, okay? Just like any strategy, you should never trust someone else's data until you verified it for yourself. Okay, with that said, let's get into it because this is amazing. Okay, so we're going to go over 4 main areas. These areas are so deceivingly simple and yet so profoundly profitable. You've heard of some of them perhaps, but I'm 99.9999% sure that you have never seen them combined this way. How so simple it is and how profitable it can be. They show up every hour, and it's so easy to spot them when you get the hang of it and pull money out of the markets. Number 1 is support. Okay, support is basically a price zone where buyers constantly show up. They're stopping the price from falling. So, for example, if I hold my crosshairs here, you'll see that this level, this price point, and this price point, they all touch about this same level right here. It's going to tell you where demand exists, where the market is likely to bounce instead of falling straight down. Okay, so we're going to watch for that level when we trade. We're going to see if the price action, if the candles start to stall out. We're going to see if the price action in the candles wick through it, like this one. It wicked through, and then it went back up. And we're going to see if it shows rejection. So I use it to plan my entries, my exits, and we're going to get to more of those entries and exits real soon. Okay, the next thing we're going to talk about, the second thing, is resistance. Again, it's going to be very simple, but it is so profoundly profitable, especially when you see all 4 of these put together. So think of resistance as a price zone or area where sellers are constantly pushing up and they're stopping the price from rising. Okay, so resistance tells you where supply exists and where price is likely to reverse or slow down. Like here's an area, and notice how it keeps hitting this blue line. Here's an area, here's an area, here's an area. That's not by consequence. So we're going to watch those kind of areas where price reaches that area and it fails to push through. Now I use these kind of areas to plan my entries and exits. Think of resistance as the ceiling where sellers start to push back. The third thing is when to get in. Think of entries as wait for the area, wait for the setup, then you enter. If you don't know these, don't enter. 1, location first. Trade after the price has bounced off of support or resistance. The setup is worthless if it's in the wrong location. Okay, second, confirmation. Look for evidence that it bounced hard off of one of these levels. In this case, resistance. Look for rejection of wicks, failed to push through. Momentum after the rejection that it comes down hard. And thirdly, look for risk clarity. You should know where your stop goes. What invalidates the trade idea? What price level should you move to if you are correct? We would stop out here if we're incorrect because it means the momentum wasn't strong enough to carry through. And we would get out here if we are correct because that's the next area of support where it tends to bounce at that area right there. And the fourth thing, very simple, when to get out. There are only 2 reasons to get out at any level. Number 1, you're wrong. Price breaks support here or resistance, and your idea is invalidated. You need to get out right away. It's not the same trade, it's a different trade. Or number 2, you're right. Your take profit area, where you thought the price would go. Price hits it. So either you're wrong, you get out, or you're correct and you get out, but you don't keep staying in regardless of those things, okay? You get paid to react to those levels. So the big picture, you exit when your entry or the reason you entered is gone. It's very, very simple. So let me clarify these 4 things and I'll show you a few setups to make it very simple, show you how profoundly profitable this is. So, support. the zone where the buyers defend, resistance, zone where sellers defend. You get in at the key areas of support or resistance, not before, but at the zones after it's confirmed that it is bouncing off of that level. And 4, you get out when you're wrong, or you get out when you're right and the price hits the level where you thought it would go. Now let me show you putting these all 4 together. It is profoundly simple and yet profoundly profitable. Here we go. Let's start with this trade example right here. We've seen price bounce off of this level several times already. So here's a very strong wick up to that level, and it looks like it's going down. But the take profit and where we would get out, again, there are 2 reasons why we would get out. If we're wrong and it starts to go above that level, or if we're right and it hits our take profit area and we would get out. Now, where could it possibly go to? It could go to this level here. We have several point touches here. It could come down even farther, and it could come down to here. It could come down to here. It could come down to here or here, and I really like this one because after this area, we've got all this space between these 2 levels where it could come down to here. So I'd probably wait until it has this space to travel from to here. That's a nice take profit. From here all the way to here, that's dinner money right there. That's 62 points right there. You could make over $100 on every contract just on micros. So minis you could make like over $1,000 on per contract on that. So that's a very nice trade. Let's see what happens. The price keeps going down, but it hasn't passed this level yet. There are all these intermediate areas where we could take price, but we wouldn't jump in yet because we don't know if it's going to go far. We have to see if the momentum is going to carry it. Price keeps going down, and at this point, we know it's past this last level, and we know it's almost halfway down to our take profit. It's a very safe entry at that point, and we would go ahead and enter, and we would know we would put our risk where we're comfortable losing money, and we'd put our reward exactly where we should go to. So the win rate is very high on these, so we would imagine it's going to go and hit it. And now it does pull back a little bit, but then sure enough, it's going to go ahead and hit that level. That's a nice take-home profit. Let me show you another example that's just as simple and just as high of a win rate. Here's another great example going long or going up. So we've already seen this support area. It gets hit multiple times, very hard, and it rejects. Now all of a sudden, let's see what price starts to do. So price starts to come up. That's a very strong candle here, and it's already cleared this area. It's cleared this level, and where could it go to? Where would our take profit be? It could come up to here. It could come up to here. And after this level, if it starts to go up any farther, we'll know that the momentum is going to continue, and the very next level that it would hit is all the way up to here. It's a very nice take profit. This kind of stuff happens every day. Let's go ahead and check it out. Where does it go to? It starts to go up a little bit, and about that point, I would get in. Even though there's a very long retracement, I would only put enough, or as much as I could afford to lose, and it starts to go up and hits that area with almost reasonable predictability almost every single time. A very handsome profit there. That's dinner money. So as you can see, this is an ultra simple, very easy to follow beginner strategy. So you want to know where the support is, because that's where the buyers defend. You want to know where the resistance is. That's where the sellers defend. You want to get in at those key levels after the confirmation, not before. After the confirmation that the momentum is going to continue to the other support or resistance. And then you get out when you're wrong or when price hits your target. This is the exact way to trade the strategy. It shows up multiple times a day. Hit me up in the comments below if you have any questions about this strategy. I'd greatly appreciate a subscribe, and I'll provide a whole lot more examples of very, very beginner easy strategies to follow that are super predictable and very highly probable.